Hello, welcome listeners and market participants to KBRA's European Credit Podcast, Conversations in European Credit. I'm Gordon Kerr, Head of European Research at KBRA, and today I am joined by Luigi Griffo from our European Investor Relations team here at KBRA.
Hello, everyone. It's great to be here again, Gordon, so thanks for the invite.
Today, we will be covering the topic of our investor survey, where we have solicited responses from across the European securitization market. The results of this survey can be found on kbra.com, along with our previous surveys and our 2024 outlook for the European securitization markets, as well as other general publications on the securitization markets in Europe. The intention of this survey is through a few short questions to get a picture for the market. First, we ask investors' views on the direction of spreads over the next 6 months. We also ask them how they would characterize the current market environment. And then, of course, we ask them their views about the issuance pipeline and where they see things going in the next 6 months. We also ask their views for the markets that they are likely to see experiencing the most collateral stress in the next 6 months. For our new listeners, in this podcast, we do things a little bit differently. For our survey podcast, my colleague Luigi will be the one asking the questions. So, Luigi, over to you.
Thanks, Gordon. This is the 5th survey we've done soliciting investor responses, and I understand you've developed something new as a result of the responses we've received over time.
Yeah, thank you, Luigi. And of course, actually, thanks for your input on this. KBRA has now produced 5 surveys gauging investor sentiment on the European securitization markets, as you highlighted. These surveys give us a pulse in the markets in terms of spreads and issuance, but combining the responses to our questions and providing them with a weighting can give us an overall picture for the positive or negative sentiment that is being felt across the market. So we've taken each response and given it a weighting as to its negative or positive sentiment, and then taken a net balance of the responses to 3 of the questions regarding spread direction, issuance expectations, and lastly, the characterization of the current market.
It sounds really interesting, and I'm sure the listeners are intrigued at this point. So it kind of begs the question, how does this new sentiment index track based on the latest data we've collected?
Well, the result of the current survey shows that the overall sentiment of the European securitization markets is the most positive it has been since the first survey we had in June 2022. The net balance of responses suggests that 52% view the market positively, or a 52% net balance demonstrating a positive view. This compares relatively well to the start of the year, where sentiment was still overall positive, but not quite as strong as it is now. Further, it is the most positive the market has been heading into the global ABS conference, as we have taken the survey questions ahead of the event. In prior years, the market was actually pretty negative heading into the global ABS conference. But as we have experienced over the course of the 3 days so far, it has generally met those survey responses.
That's really interesting, Gordon, because it's in contrast with what we've seen in previous years. And there's definitely been a most positive buzz at the global ABS conference this year, which will signal buoyancy for the securitization market in the months to come. We at KBRA in particular have hosted over 220 meetings with investors, bankers, and issuers on site in Barcelona across the 3 days. And it's been a very busy time for us and very positive.
Yes, we have all been very busy this past week.
We haven't seen much of the sun that's been shining across the 3 days, unfortunately. But why don't we dig more into the specifics of the survey, and how do investors view the current state of the market at this point?
Yeah, this is a question that I find very interesting. A large portion of those that were surveyed hold the view that the market is up and down, but will perform in the long run, which is around 40%. So a sort of steady state driven by wider market movements, but not really it's not really going to blow out significantly. Some view the current market as a steady positive performer. and a significant amount expect the market to keep going and remain largely ignorant of the broader market sentiment. However, there is a small percentage that do predict a relatively volatile market ahead. Now, this is only 6%, but a not insignificant portion view the market as currently at risk of large negative moves, a further 14%. So we will see what happens as we head into the summer period. But overall, it feels like investors are largely happy with the state of the market, and very few are worried about negative activity.
And how does that translate with regards to spreads movements? Like, do market participants expect further tightening, or are they expecting pretty constant levels in the months to come?
Yeah, so the majority match that expectation. So 58% feel that the market will remain largely unchanged, which is in contrast to the past. Very few respondents feel that the market will widen at all. In fact, in total, 12% expect outright tightening, and 20% of the market expect it to head in a generally tightening direction. So that's nearly a third that think that we will be moving in a positive direction. On the other side, none of those surveyed feel that the market will widen outright, so heading in a negative direction, while 10% hold the view that the market can move in a widening direction from current levels, but are not sort of an outright negative. So, kind of a neutral to positive, which would suggest, as we highlighted in the previous question, a sort of steady market, but in a positive way.
How does this compare to previous surveys based on the responses?
Yeah, the majority of investors that I mentioned hold the view that the market will remain largely unchanged. This is the most that we have ever held of this view over the prior 5 surveys. Views have shifted away from a widening bias that was in our prior year's survey results, so June 2023. A total of 42% expected market spreads to widen in June 2023. And then in December, so our survey at the end of the year, this fell down to 19%. But in our current survey, there is only 10% that hold this view. So while the widening expectations have decreased from prior surveys, the expectations for tightening have also decreased. So a total of 50% expected spreads to tighten in December 2023, but only 32% currently hold that view. So a migration, if you like, towards the middle range.
Thanks, Gordon. I suspect there would be some nuances based on the asset class or the sector, if you will. So if we had to take more of that asset class approach or sector approach, how does that change investors' expectations for spread movements?
As always, each sector has its own nuances according to the survey respondents. So we found that investors in ABS, CLO, and RMBS hold the most positive expectations, with approximately 1/3 expecting spread tightening. Overall, investors across all sectors have a large proportion that expect no major change in spreads, as should be expected by the aggregate comments that I made earlier. However, all of the sectors do have investors with opposing views. So, for example, while 38% of ABS investors expect to see spread tightening, there are 6% that expect to see spreads widening. So, the sectors that we found with the largest widening bias are in CMBS and in the other sector. Other is a classification that we have that includes investors that may be involved in things like MPLs or SRT. So these are the investors that hold the strongest views for a widening direction, with 25% for CMBS and then 17% in the other sector. I should mention that those investors in the other sector also hold broadly speaking, a net tightening bias, with 25% expecting the positive momentum for the market in the next 6 months versus the 17% that are holding the opposite view.
Thanks, Gordon. I think one of the interesting aspects of our survey is that it classifies and segments investors by type so that you can gain an insight into how different type of institutions are thinking about the market. So based on the responses of the surveys, will you be able to give us a little bit more granular data on what are the themes that have emerged based on different investor types?
Absolutely. I think the one that was the biggest surprise is that hedge funds are the most negative of survey participants, with 100% of those surveyed suggesting that the market will move wider in the next 6 months. This contrasts with the positive sentiment of what we've classified as asset managers, general asset managers, where 21% expect the market to tighten outright, and over 40% believe the market will tighten in general. This is a similar view held by the insurance company investors, who are also expecting, broadly speaking, tighter markets. Bank investors, pension funds, and others are a bit more benign in their views, with a strong proportion of 75% or more expecting no change.
Thank you. And for the last piece of the puzzle, I will think alongside spreads and current market conditions, what's the investor sentiment with regards to issuance in the second half of the year? We expecting a frenzy of deals?
Yeah, here the majority of investors feel that issuance will continue to improve. While the largest number view the market as seeing moderate improvement in growth, there is still just under a third or 30% view the market to have a strong and expanding pipeline. And of course, there's still a quarter that expect a steady supply over the next 6 months. So there's left with only a small proportion that anticipate the market will be very quiet, 4%, and none of those surveyed expect to see a return to prime and retained transactions, which is something that I find particularly heartening and interesting, as this has been something that the market has been hoping we would move away from a lot earlier than we have been to date. So finally, a migration away from that central bank funding or even liquidity book hold type of attitude. So a real positive picture with regards to issuance going forward.
Yeah, it seems to be very comforting for the market activity to come. And it's been a pretty busy half of the year so far, so long it may continue for the coming few months. And similarly to what we've done with spreads, can we go a little bit maybe deeper into the different sectors in terms of what the issuance expectations is? I guess here there will be some differences and outliers too.
Yeah, views here do differ, with investors predicting an expanding pipeline across most sectors. The exception is really the CMBS investors, who expect the market to be quiet in the months ahead. I mean, given the state of the commercial real estate market in Europe, this is not a surprise, but we have still seen a number of transactions despite this overall lower level of activity in the commercial real estate markets. Other investors do hold the strongest views about an expanding pipeline, with 92% of them expecting some form of growth and expansion. And I think this will, in large part, be driven by the growing SRT market and the number of investors that fit into that category. A total of 70% of CLO investors expect growth in this sector, and we have been experiencing that to date, as well as the need for it, given the number of deals that have entered into their amortization periods, which we published a report on earlier this year. So you can go on the website and take a look. Further, ABS investors and RMBS investors are also expecting an expansion of their pipeline. However, a small group of RMBS investors hold the view that the market could be quiet in the near term.
Okay, thanks, Gordon. That's interesting, and it will certainly make for a few months ahead to watch, considering also two big elections coming up in the UK and the US. So one of the questions on our survey is around the performance of the underlying collateral. And in previous surveys, UK emerged as one of those areas where most stress will come from. How does that compare to what responses have been in the last survey?
Yeah, this survey actually shows a slight migration away from concerns for the UK. Investor concern for that region's collateral has migrated from 70% of investors in June 2023 down to 48% in December 2023. And now, in the most recent survey, only 38% felt that the UK was the sector most likely to experience collateral deterioration. A large percentage have instead migrated to the view that there is a likelihood of asset performance deterioration across Europe and European transactions. So it's migrated from a UK focus to a more broad European concern. Broadly speaking, though, investor concerns have improved, with 14% no longer forecasting collateral performance deterioration in any region. And then there are a couple of minor others that are also considered. But yeah, I find that last point particularly interesting in that people are starting to feel like we have almost been through the worst and are potentially heading into better performance on the collateral side going forward.
Yes, some positive views to lead us into the second half of the year. And hopefully the market will manage to escape any severe deterioration and continue to thrive. Just before I go, I wanted to thank all the investors that contributed their views to the survey. Again, I think we are growing the survey responses over time, and I'm sure they'll enjoy reading about your new index that you've developed as we continue tracking what the sentiment of the market is. And I look forward to sitting down again at the end of the year and seeing whether the predictions have turned out to be correct or not. So thank you again.
Thank you very much, as always, Luigi. For those investors listening in that are not already in touch with Luigi, please reach out and make sure you are on his list so that we can arrange to share our views more directly with you. As Luigi mentioned, our survey has proven to be actually pretty prophetic. The previous survey in December 2023 showed positive expectations of a re-emergent European securitization market, which has proven to be accurate. Issuance has increased in the first half so far, and spreads have tightened in 2024. A similar experience occurred after our June 2023 survey, so it has proven to be rather prescient. To summarize the views of the market, the tone maintains a positive bias, albeit with a migration towards the middle ground, at least in terms of spread direction. Issuance is expected to remain strong into the end of the year, and collateral performance does remain a concern, with a bias remaining on the UK, but there is growing concern across Europe. And on a positive note, an increasing number of investors are not expecting further performance issues ahead. Let's see what the second half brings us. For those attending, we hope you have had as productive a global ABS conference as we have. That's it from us today. As always, we hope these conversations in credit help to illuminate the many trends taking shape across the markets. For more in-depth coverage of the themes discussed today, or to learn more about our unique approach to credit, sign up to the KBRA website to read all of our research. Have a topic idea or comment you'd like to share? Reach out to me or one of the KBRA analysts on today's episode. Be sure to rate, share, like, and subscribe to this podcast so you can be notified when new content is available. Invite your colleagues as well. We'd love to count you all as informed listeners. This is Gordon Kerr, thanking you for being part of the conversation. Take care, everyone.